let's share screen here.
So yeah, that'll conclude the marble portion of your regular scheduled program here. And now we're going to turn to PBS with Max on liquidity pools.
Heyo.
Shortly after, we will have LeVar Burton with Reading Rainbow.
My interview with Harrison Ford.
Maybe I'm dating myself by referencing Reading Rainbow.
All right. So I can't see the stream right now or the chat, so let me know if someone's asking anything, or let me know if you have a question. But
I feel like we should open with saying this is not financial advice. We're just trying to educate people if they have questions about how liquidity pools work and just Alcor in general. We use it all the time. Like what you do with your own tokens and your own money is up to you. But if you have questions about how we're doing stuff, this is the forum to ask them.
Yeah. So here I am on Alcor. And Alcor is a decentralized exchange like protocol for Wax, where you can trade with like other people, and there is no middleman. Everybody is kind of like the custodian of their own assets. It's all done by like a smart contract, so you can trade on them on the market tab right now. And the way I get here in the first place is like you get to the Alcor home screen. Up here, you change the drop down to Wax so that you're on the Wax mainnet. Then you connect your wallet. And you can use your cloud wallet if you like, or you can use all those other options there. And then you can go to markets and see all the different currencies that trade. All these currencies are trading on the Wax blockchain, so they would all trade against whatever they're paired against, but they would all end up in your Wax wallet. So you can go to the swap option here, and then swap for, and it's giving me the main one here is TLM and Wax. So I can now go here and be like, give me 50 Wax worth, and it gives me 25 TLM. I can say yes, swap, and then now I have 25 TLM in my wallet. So for that to happen, there wasn't somebody else on the other end of that trade who was at this moment looking to sell this amount of TLM for Wax like there would have been on this TLM Wax market side. So this is like the continuous order book. This is where people are putting like limit orders in, waiting to buy. These are real people with like orders to buy or sell their TLM for Wax. Whereas on the swap, the price is just determined by people buying and selling, and the buying and selling isn't happening against other people, but instead it's happening from a liquidity pool. So it says down here, liquidity sourcing fee, you're paying 0.3% for the sourcing of that liquidity for that specific trade. And everybody can participate in providing this liquidity on the same to the pool that I just traded against by just hitting up here on this plus liquidity tab. And now I can add my 111 Wax into it, and it'll automatically ask for the counterpart, because it's determining that these two have to be 1-to-1 equal. So I can't do that right now. I have to swap. I'm going to just switch this and then provide like this. So I'm going to say provide liquidity, approve. And then what happened now is the 25 TLM and the 49.7 whatever Wax left my wallet, and I was given these tokens. What are they called? Wax TLM tokens. So I got 22 point something of these Wax TLM tokens now, and those tokens represent the ownership of this position inside of the liquidity pool. And you can see that this is changing every time there's a trade happening against this pool. And you'll see whenever these numbers change, that's that trade happening. So let's see if I go back and forth one more time to like refresh this. Oh, well, I wish I hadn't like been yield farming on this account in the past, because now it has the numbers from my past like activity. But usually the way you would read this is it tells you your deposits, and then here it would tell you your earned fees. Right now mine are both negative because I sent some of the staked tokens out without not staked, but like pool tokens I sent to a different address. So then it looks like, yeah, these all got, basically you can't look at my earnings and fees and make it make sense, because I fucked this up. But we could try it with a different one. I'll do it.
Yeah, I mean, I can show what I have currently going on my yield farming account just to like show what's the earnings are and how to read that if you want.
Yeah, if you have something more clear, because mine's a little messy,
So, I mean,
at least on that wallet.
Somebody said
but-
permanent loss. I think they want to know about.
Yeah, so what you're doing there is you're providing both assets to the pool, and now when someone wants to buy TLM, it'll take your TLM and give you the wax. And if someone wants to sell TLM, it'll take the TLM from them and give them the wax back. So it's like, you know, you're trading 1-to-1 back and forth, but collecting that 0.3% for your fee every time. But if now the price of TLM moves more quickly in one direction than the price of wax, like it recently exploded upwards, I think like almost 100%, it more than doubled compared to where it was with wax before. So what happens then is that the position in your liquidity pool where you have, let's say you start with when wax and TLM were 1-to-1. Let's say I opened a liquidity pool position, I put 100 wax and 100 TLM into the pool, and then TLM went up to like 2-to-1. So now what would have happened is my pool would no longer have 100 of each asset, but rather it would have probably like 60 or so TLM and 160 or something wax to try to even out. As the price of TLM went up, my amount of TLM in the pool went down, but I was earning fees on the trading. The risk of loss is that the price movement in TLM growing or shrinking, whatever, in the price movement being so dramatic that the amount of fees that you're collecting doesn't keep pace with the value in, you know, a base currency equivalent, like let's say US dollars, versus just holding 100 of each of the, like if I had just held 100 TLM and 100 wax, I would be worth, let's say, $200, assuming that wax and TLM are each worth $1 in this scenario. But now that TLM went up, to $2 and wax is still $1, I only have 40 wax or TLM left, but I have 160 wax, and let's say that's worth slightly less than had I just held on to the 100 of each of those assets to begin with.
Yeah,
So
for example, like if you want to look at my, like right here, I have my wax Aether pool, and I have 2.87% of the share of the total liquidity. So all the liquidity that's being provided between myself, Max, and all the other people, I have 2.87%. So of that 0.3% liquidity share fee, or whatever they call it, I would get 3% of that on. And these trades are happening over and over and over again, particularly with a pool that's very big like this. Same thing with Wax TLM. So you can see, like, over the course of time, I deposited 9,000 wax and 19 million Aether over the course. This is over a long period of time. Like, I've been doing this for a while, but over the last, say, 2 months, something like that, it's particularly with Aether falling the way it has because of the crafting and whatever, our planet, a lot of people have been trading Aether into wax. So I'm providing the wax liquidity from my pool to them, and in exchange I get more Aether. So as far as the earnings, I am down 2,662 wax from my initial deposit, and I have that equivalent theoretically in Aether. Now the value of Aether is very volatile, so that might not, if I were to pull this out right now, I might incur impermanent loss. Now I don't incur that loss until I pull it out. So, like, for example, how much Aether is 2,662 wax worth right now? So that's worth 12,853,000. I have 12,700,000 ish Aether in earnings, so it's more or less equal.
So yeah, you're close, but you are right now. You are at a slight loss.
So depending on what your goals
if you
are,
had just held what you had initially deposited,
exactly,
you're down like 100,000 Aether or something. It's not crazy high, but it is like an amount. Now that risk of that loss becomes realized if you exit your liquidity position, and the risk of suffering a loss like that is mitigated by having that position open longer, because as a person providing liquidity, you make your return comes from trading volume, not from price movement. and the ideal pair for an asset to farm liquidity on would actually be something that has very low volatility but really high volume. So someone in the chat was asking a cheat sheet on how to add tokens to your Wax wallet. There is a way you can add the tokens to like the web wallet, but the way I always do it is I just sign into this Alcor Exchange that Mark has open right now. I just go up to the wallet tab and I can see all of the tokens from there. Like it, and then I can hit send or transfer, and that way I don't have to like mess with trying to import them into any other wallet. I just connect whatever wallet I'm using to Alcor, and then I use Alcor's wallet tab to interface with all the assets that I have.
Here's a good question, Max. Does your trading pool income get added in the pool tokens? So if the earnings I get from those fees, are they immediately added into that stake pool automatically without any extra?
Yeah, so the way that, yeah, it does. So it's like it actually like compounds and adds them to there in real time. So as every trade happens, the new balance of the pool is basically now, you know, the balance of that it was before plus the 0.3% from the last trade, and that basically will now moving forward be the total value of the pool, and your ownership of that total pool is represented by those tokens that are in your actual wallet. Like Mark, if you hit the minus liquidity button on that again, it's those tokens there at the top, the ones that
so you see when I pull it out, it's equal to both of them combined.
Yeah, so, and then actually if you go to the wallet tab again, these are the tokens that I'm talking about. See how he has a bunch of tokens? These tokens represent your ownership of those different pools. So 100% ownership of one of those pools is represented by how many tokens, like of those tokens, have been issued by that pool protocol. And the way these tokens are issued is based on people supplying liquidity to the protocol itself. So like while the pool changes, you know, going up and down with the value of the market and the asset value shifting, the ownership of the pool stays constant with your ownership of those tokens. So by that, it basically means that the fees and stuff that you're collecting are compounding every single time that they're collected. Like,
yeah, so I mean, like, as far as a risk factor here, like I liquidity farm Wax Ether because I'm satisfied, because I like and consistently play in our planet. I don't mind having either side of this pair. Now, ideally, I would probably want more on the Wax side, but since I'm long on our planet anyway, I don't mind if this fluctuates on either side of the pair. Same thing with I'm pairing against these land minerals, each of them, so that as people trade in between, so they have like a Waxen and Ethereum land, but not the other two, they would swap into that with the excess land minerals to have diversify or whatever. Then I get earnings for that, you know. So you can see like I've earned, and I don't mind having any of these land minerals. All of them are equally valuable at this point in time. So for me, I don't mind just parking all of the land minerals I've accumulated thus far and getting earnings for land minerals, all of which I would want. And now when the game launches into that next phase and the land minerals do have different values depending on what their utility is, maybe I would rethink that. So I think part of mitigating the risk is choosing pairs in things that you would like, you are okay having either side of that currency instead of trading a bunch of bullshit on some game you don't understand. That is pretty risky in my opinion.
Yeah, so the first question here, this is about approximate minimum time. That is, in this network, not very long because it doesn't cost you any transaction fees to enter and exit a liquidity position. And the thing that you're looking for to make a return is volume. So the biggest pools and the best like yield on Alcor are 100%, like hands down, Wax TLM and Wax A Ether. By a huge margin, Wax TLM is the most profitable pool at the moment. Like, here, I'll pull up my stream and show you the Wax TLM pool has. If we're looking at the Wax TLM pool, you can see here, you can check the volume in this pool, and we can go to like 30 days.
So the impermanent loss is
like that's at the peak.
Slightly different in the Wax world than it is in the Ethereum world, like Uniswap, for example. And Max can go into that later as far as how he liquidity pools on Uniswap if other people are into that kind of thing. But the fees definitely play into the impermanent laws. Now, there isn't like fees for pulling in and out of these transactions per transaction on the Wax network, but there is in Ethereum. And so like, and other blockchains as well that you can do yield farming on. So
this right here is like if we're looking at the volume around here, which has been like kind of the average recently per day, this is like 160,000 US dollars. This is like 1.2 million, and that's in like a day. Yeah. So if you're earning the 0.3%, so that means that the liquidity pool is pulling like $400 or $500 a day in yield for providing liquidity on a day like that. And then you can see that the liquidity, like basically you have on a day like, let's see, on this spike, for example, it's pulling at its peak, it's pulling 3.5 million wax in volume, but it's pulling that volume from only about 500,000 wax. So you can see basically that's like, you know, that's like 6 times more volume coming from the source of that volume. So this is putting up a lot of yield. Like the liquidity position I literally just opened a minute ago, it was like 50 and 20 something. I feel like it could already be withdrawn and possibly have made me some profit there. I think I saw a different question about impermanent loss is only something that happens if one of the assets loses value compared to the other one. That's not the case, actually. If one of the assets blows up in value compared to the other one, you can also suffer impermanent loss. Because like what's happened, for example, with the TLM recently, where TLM exploded versus Wax, if you had 1,000 TLM and 1,000 Wax in your pool, and suddenly TLM is worth 2 to 1, you know, the pool would have balanced out your position to be equal 1 to 1 to itself, meaning that your TLM side will have dramatically sold into Wax. And if the price movement had been so dramatically upward, that movement into Wax from TLM, if you then withdrew the whole position, could show you at a loss compared to having just held 1,000 TLM and 1,000 Wax.
They also want to know what
impermanent
happens.
loss happens when your asset has like high volatility. Like if the price movement is dramatic, it's easy to suffer impermanent loss.
They want to know what happens when both assets lose value as well.
Okay, so yeah, when both assets lose value, then obviously like it depends. Like the impermanent loss is calculated in a sense where you're talking about both assets valued in a third asset, which is like a base currency. So right now, if we're talking about Wax and TLM, the base currency could be dollars, because I usually deal in dollars. So it's like when you're looking at the impermanent loss, it's also in terms of a base currency, where we're saying like, okay, if we have 1,000 Wax and 1,000 TLM, they're worth this amount of money in a third currency in dollars. And then if TLM explodes 2 times what it was worth before, now if I had pulled that out at the new ratio that it's evened into from providing liquidity, that in the base currency of dollars is could be considered a loss versus just having held 1,000 of each asset without providing liquidity. So in those same terms, if you're calculating if both assets are losing money, then you're losing money in your, obviously the base currency is also depleting.
So then it's kind of mitigated in a way that liquidity pooling as a whole, I feel like, lends itself to time. It's not a short-term play. It is very much a long-term play. And so, I guess if both assets lose value, and Max is much smarter than me, so you can correct me if I'm wrong.
Yeah, if both assets lose value, like it's the same. risk as just simply holding the assets without using them to provide liquidity.
it's
Like, it's
basically
like, what if
doesn't
I
have anything to do
hold
with
wax in my
impermanent loss.
wallet and wax loses value? Then, you know, same problem as if I hold wax in a liquidity pool.
Impermanent loss is their
and
value
wax
versus
loses
each
value.
other, not their value versus the base currency.
Yeah,
It's
so
like-
the
Yeah,
impermanent-
yeah.
the
So then
loss
you would
risk
incur
there
a
is,
loss
is
if you were to
is it
sell it
better
into
to use
your
those?
base currency, yeah.
Was it a better move to use your assets to provide liquidity, or would you be better off today if you had just
I think-
held on to those assets?
I think we got
without
enough on
taking-
that. Like, the next thing some people are basically asking is like, why would you want, before we do that, like, why would you want it to be in wax A ether if it's so volatile and has the biggest impermanent loss? Like, who cares about the volume if it's that volatile?
That's true. So yeah, that's definitely, like, if you're looking for just making profit and hedging your position against loss in general, yield farming volatile assets is pretty fucking risky and not advisable. The reason I personally yield farm Aether and wax was because I didn't care which side of the equation I ended up on. Like, if Aether lost value, the position shifted into Aether, and I had the Aether to craft with, which was something I wanted to do anyway. And if Aether exploded in value, which it also did while I was farming it, I had a ton of extra wax in my pool, which I wanted to use to buy NFTs. So I also wanted, so I didn't really care one way or the other.
Yeah, so as long as you're
so-
long on both assets, like I said, it's not a short-term play. It's you pick
Yeah.
your positions in an intelligent way so that you have,
That kinda
I wouldn't
goes-
choose some coin of some game I never play unless I knew what I was doing.
Yeah, for me,
Because
it's
I don't know
also I
anything
like
about
to
the
provide.
economy or anything what this currency actually does. Wax, TLM, Aether, those are things that I know and
Can I
understand.
get this next question in real quick? They said so you
Yeah.
can't lose more than you put in, right? Question mark.
That's correct. Yeah, there's total loss would be the absolute highest risk for this, but that's also only possible if the liquidity pool's contract is compromised and somebody essentially like steals money from the pool. Like, almost certainly, even if one asset were to go like, I think it's like 400% is like the threshold to clear out one side. So if like TLM were to blow up 400% against wax, the worst case scenario, you just have all of your assets in wax in your position. Like, it's not.
So like some
you should
things
still
you could
have,
do.
like, it shouldn't be a complete loss. You'll still have at least half of the asset pair if
Real-
the pool hadn't been completely, like, if someone didn't break the encryption or something and like figure a way to like steal from the pool. Another way liquidity pools get wiped out, and this is the way that like coin market caps completely tank, is that like if somebody figured out a way to like print a shit ton of TLM, for example, they could just flood the pool with sell orders and like tank the market price of TLM and clean out all the wax from one side. But all the liquidity providers would then be left with a ton of TLM, which, in that nightmare scenario would be presumably worthless.
So here's a good follow up to that. So what about a token like 6pm's Guild, where there's about to be many more times the amount of tokens than exists right now? When the value of Guild falls but transactions increase, will that be a good thing for the liquidity pool?
Hold on, I gotta see this one.
So basically, someone's about to mint a bunch more of their tokens.
So there's
Would you
already a
recommend
Guild
pulling
token,
out,
but
or-
they're about to add a bunch of volume to that, a bunch of extra coins to that currency, I guess. So there's a higher circulating supply. Seems to be the question.
Is it good to be in a liquidity pool?
So
Something
yeah,
about to
okay,
inflate?
yeah, that's exactly the kind of thing. Yeah, you want, as a liquidity provider, you want volume, lots of volume. So high volume is how you make money. It's all about people trading against your pool, not ever about the price moving. So
Because you're getting that fee per transaction, so you get a percentage
so
of that fee per transaction. So the more
So
volume,
like
of
what I'll
transactions
do,
where you
what I do
accumulate
as a
earnings.
part of like my hedge in my portfolio, what I do is I take like stablecoin assets like DAI and USDT, for example, and I pair those together and provide liquidity to a decentralized like exchange in dollar pairs. Because in the same way as I didn't care about which side I ended up on Aether and wax for that pair, I don't care either. Like, I don't care if it's all Tether or all DAI. It's all worth $1 at the end of the day, like 1 to 1.
So
so
in
I
the
can
wax
provide
world,
liquidity.
there is a USDT tether, like a wrapped tether that is Wax USDT. So like that could be a relatively, safe hedge in theory that you would have if you, instead of like a game that you play like Aether and Wax, you could have something that is tied to a US dollar or Wax tokens, which obviously if you're on the Wax network, you probably like Wax and want to buy NFTs. That in that way,
Yeah.
that would be a relatively safe liquidity pool to be in. Because you don't mind having a stable coin or you don't mind having more Wax if you're long-term on Wax, which most people are. Obviously, you wouldn't be here if you weren't. So in that way, that is a kind of safe play. Although the Wax USDT token, I don't think a lot of people know it's there. So
The
there isn't
exchange
a
rate's
whole
not
lot
very
of
good.
there isn't a lot of volume, and the exchange rate is slightly different than what you would see on major exchanges. So that one is kind of like long term, I think, is a good play, but in general, it's not quite perfect, I guess.
Do you see this next question?
So I
That
think the best way to mitigate the risk is, yes, to monitor the market and to remove your liquidity at like a time where you feel the risk is too high. So like for Aether and Wax, for example, when Aether started to fall, it wasn't like a 1 hour and the market collapsed like 90%. It was like a several week like slow crawl to the bottom. And if you're watching those markets and monitoring your liquidity and you're seeing it's starting to shift out, you can then just withdraw your entire position and sell the remaining Aether directly into Wax, wait for the market to like start to find a bottom, and then you basically at that point buy back in and then start supplying liquidity again to the pool and like shifting around which like stuff you're supplying. So what I had been doing during the downturn of Aether is I closed my Aether Wax pool position entirely, and I shifted all of the Aether side of it into TLM, and I started liquidity mining, or like yield farming rather, TLM Wax. So every day I would collect my Aether and I was selling it, and I would split it 50-50 for TLM and Wax, because TLM was not on a downward trajectory, and it was just kind of like doing its little like up and down, and the volume is good. So I was like, instead of providing liquidity to a pool in a position that's currently bleeding down, I'll take my mining revenue and just using the swap transferred into something else and provide liquidity to that. So I really like that TLM is on there, and also TLM doesn't only trade on Alcor, which that's kind of like the downfall in my opinion of Aether, is that like TLM, you can trade that on Binance, you can trade that on Uniswap.
So it's a cross-chain token in addition to a utility token in Alien Worlds as a game. So it is kind of an interesting quality to TLM as a token that I don't think people quite grasp, that you can use TLM cross-chain into Binance, which is actually a pretty valuable thing, depending on what you want to do.
So yeah, you're saying about the fees on the other chains. That's true. On other chains, the way that and it's going to kind of be a shitty like solution, but the way that you deal with high fees is high volume. Like if you're supplying liquidity to like Uniswap, it should probably be like $20,000 or something. Otherwise, it doesn't make sense to pay like $40 in fees. Like last time I supplied liquidity to Uniswap's like V3 protocol, I think it cost me about $43 in Ethereum fees just to send, like, because you have to first you have to give Uniswap's smart contract permission to interact with the tokens that you're using, which is one transaction signature, and then you have to sign the supply transaction, which is a pretty complex transaction, usually costs quite a bit of gas to like pay for. So in order to so that was $40 just to put the tokens into the liquidity pool on Uniswap, and so presumably it'll cost around $40 to remove them as well. So now I have to essentially earn at least $80 in yield before I can consider removing the position. And if I do it after making $80 in a yield return, then I'll remove it, and it'll be like a break-even point. So
yeah, so monitoring the market,
you have to plan a lot. You have to plan ahead a lot more and use a lot more money or a lot more value if you're trying to provide liquidity on Ethereum markets. But then there's also Ethereum side chains like Harmony One or Matic, where those fees are basically minuscule, like less than a fraction of a penny, and then it becomes more reasonable to supply liquidity again in a little bit like lower values. But you always have to do the math, basically, like how long do you need to supply liquidity before breaking even? And if the answer to that question for me is more than 2 weeks, then it's probably I'm not going to do it unless it's something like US dollar tether coin and DAI, which is something that's like, okay, I can leave that alone for months, and no matter what happens in the crypto market, those assets are theoretically unexposed to the risk of like a collapse, or also unexposed to the potential upside of a huge crypto boom. But either way, it's something that I can leave sitting until at least I make some money on the yield.
So I mean, like that ability to like watch the market, monitor, pull out, and readjust your position is something that's more uniquely distinct on Wax because of the lack of fees. Your strategy would be slightly different.
It's definitely
on
more
Ethereum,
accessible. Like you can do the same thing on Ethereum. It'll just cost you like a lot of money, and it only makes sense if you're moving a ton of money around.
So it does kind of depend on the chain with Wax compared to Uniswap or Alcor. Uniswap, I guess, as the platform, but
yeah, but definitely.
So do you want to show like what you do for Uniswap as far as like the whole thing about how the routing for a lot of those swaps on altcoins go through a specific trading pair, and that's what your strategy is for Uniswap?
I don't know if we need to get into Uniswap today necessarily. I mean, I feel like the Alcor breakdown's good. If people, we can save that for a second episode.
Alcor, there's a lot going on too. So Alcor, you can do. I don't know if people are aware of Alcor's cross-chain. Oh, you got me.
Oh, whoops, sorry.
No, that's cool.
Do you want me up? Okay.
Yeah, definitely. So on their markets, there's a cross-chain, and then the USDT is like Wax wrapped tether. What that is like an actual USDT token from the Ethereum network wrapped in an Ethereum-based smart contract and then ported over through the bridge. And you can actually have these tokens, and then in the web wallet, you can go to the Ethereum bridge, scroll down to the token bridge, and you can see here Wax Tether. You can withdraw to Ethereum, which, I mean, my Tether isn't in my cloud wallet right now, but you can do that and then basically send it back out to your Ethereum wallet and use it from there at pretty much any exchange in the world, because Tether is a pretty accessible stable coin. Also in the same way, you can use your Tether from your Ethereum using this bridge. You can deposit to Wax by basically just connecting your MetaMask wallet here, and then connecting, like you can send your Wax here and then basically withdraw it, go over to Alcor, and then use it to buy Wax directly on the chain rather than trying to use an exchange. Although, be warned, the volume is not great. Like if I wanted to buy like $100 worth, it's probably gonna impact the price quite a bit, but the price is also pretty good.
Yeah, so what he's basing that on, as far as like what you would be kind of careful to see, okay, on Alcor,
800
you see that one Wax is equivalent to, basically 11 cents USDT. Now, what you'd want to do is check like other major exchanges or like an aggregator like CoinMarketCap to say, okay, what is the broader market valuing Wax to USDT, and see if Alcor and the liquidity that exists on there is close or the same as everywhere else. And the difference would be considered like arbitrage, as far as like what the difference between different exchanges and the different volumes on it. So sometimes if you're trading on the wrong exchange and some have more or less volume than others, you might get a bad exchange rate. So, things like CoinMarketCap or CoinGecko can like give you a general idea of what the market is deeming the value of Wax to USDT is. And because Alcor is a relatively new exchange and the volume is relatively low on this Wax USDT wrap token, that's just something to look out for.
Yeah, hold on. Let me see what I could arbitrage this for.
So arbitrage trading is essentially trying to farm the difference between
Between
different
spot prices on
exchanges,
exchanges. Yeah.
spot price on exchanges, that you could buy it low on one exchange and sell it high on the other. And there are like arbitrage bots and traders that do this, and that is kind of how the free market balances out these things across all the potential places that you can buy a given token.
So let's see right now.
So like for
on
example, like
Qcoin,
I'm seeing 13 cents on coin.
yeah. So right
Seeker
now on
asks,
Qcoin,
would that be a taxable event?
which one? And yes, probably.
It depends on where you're from. So like we're in the United States, technically any crypto to crypto trade is considered a taxable event. In other countries, it is only a taxable event if you trade back into fiat currency. So I guess we can't give a perfect answer on that because it depends on where you live.
Oh, what?
You said the arbitrage trading. Yeah. Arbitrage trading, you're trading back and forth between several cryptocurrencies. So each one of those trades is a taxable event.
Yes.
So
correct.
right now at the price on Qcoin, it would be 885 would cost me 112 USDT. But right now on Alcor for 100 USDT, I can get 883. Let me actually just change this to 883.
Max, have you looked into wallet.wax.io/DeFi? That's what Richard Smet is asking.
Oh, I have not. That sounds awesome. Let me look into that right now.
Wallet.wax.io. It's just a web wallet/DeFi.
It just redirected me to like I see, DeFi tokens.
Yeah, I've seen this. This is the
So
the
Wax,
governance token and the Wax Ethereum, the economic token.
Oh yeah, okay. I'm aware of this too. Yes. So this is
a lot of the valuable stuff of Wax is that it can be cross-chain with Ethereum, which is one of the major utility tokens or utility chains.
Yeah. So
out
this
there,
is
so
actually
that
this is another layer of liquidity pooling. This is called liquidity mining. So what they're asking people to do here is to take your Wax tokens and turn them into Wax E, which is an Ethereum-based token, like an ERC20 token that represents burned Wax P. Basically, there's a rate at which like it's fixed. You burn, I think it's 1,000 to 1 or something like that, or 100 to 1 or something. But you get the tokens that way, and then you can trade them on Uniswap. You can also turn them back into Wax P, but to trade them on Uniswap, you could trade them against Ethereum. So what they're asking people to do is to then take these Wax E tokens and pair them with Ethereum on Uniswap and add them to the liquidity pool, which, just like what we just did on Alcor, will result in you getting these tokens, like how Mark was getting his Wax, or how I have like my Wax TLM tokens now, which represent the ownership of my Wax TLM tokens in the pool. You'll basically get Wax Ethereum tokens, which you then stake those tokens, and having those tokens staked will earn you Wax G. And so staking these liquidity pool tokens to earn this Wax G, which is the governance coin that lets you vote on Wax guilds. But staking liquidity tokens in order to earn something else is called liquidity mining. And I feel like that'll become relevant, in my opinion, in the future if our planet still plans to do their token swap and to issue governance tokens. My assumption would be that you would have to add liquidity to their pool and then use the liquidity tokens that you're getting, that are mining the yield of that liquidity pool, to then stake those tokens, lock them up, commit to supplying that liquidity for a certain amount of time in exchange for governance coins. And that's basically what's happening here too, where like you're buying Wax E, pairing the Wax E with your own Ethereum into the liquidity pool on Uniswap V2, and then taking those tokens and farming Wax G with them. And I think this also gets you some Ethereum rewards. It's kind of a cool concept. I haven't gotten into it, but I definitely have done this for other tokens, and I'm a big fan of like yield farming. And
Starfighter had a really
liquidity mining.
specific question.
Oh yeah, what's the question?
We found though, like, I mean, when you checked, it'd be way cheaper to just get Waxy from buying it on, like, swapping into it on.
Yeah, so if you want Wax E, if you want to participate in getting the governance tokens, I would say rather than burn your Wax P to get Wax E issued, just buy the Wax E directly on Uniswap.
Yeah,
Wait,
I don't
pop
think
over
you
to
can
the
go
screen
back
and
from
show you how
Wax.
that's done.
I don't think you can go from Wax P back or Wax E back to Wax P.
Yeah.
So that
if you
actually
go
where you
to
get
on the
stuck.
stream.
if you go to app.uniswap.org, you can go to swap, and then you can use like you can connect with like MetaMask. Let me connect. Connect with MetaMask, and then you can choose Wax E. Let's see. Wax E, there it is. And then you can use whatever you have in your MetaMask wallet. So I have Ethereum right here. So I could be like, give me 4.1 Ethereum. It'll then load and it'll say no liquidity. Okay, it's because I need to go to V2. It defaults to V3 now, which is just a different protocol for liquidity routing. And then you can see here, if I'm using Ethereum, the route that it takes right there next to my mouse is the Ethereum directly into Wax E. So not too bad. I'd get 1.5. That's not bad. I think actually this is actually worth more right now than the Ethereum I'm spending, so not terrible. Plus, I bet you the fee's not too high right now either. Let's see if I confirm the swap. How much does it say my fee's gonna be?
$10. That ain't bad, I guess.
I usually go the fastest fee for trading. So $12 would be like the top. I imagine it'll probably be like $10. So again, $10 on $100, that's not really viable like fee structure there. Like if I was gonna do like one Ethereum and it cost me $10, that's okay. Maybe. I
Want to
know.
answer this question about Binance
tackle
really
this?
quick?
Yeah, this one is definitely something Max has to take.
What was the question?
Just
It's-
tab
it's-
over to the stream.
Yes. Oh, if any.
And if you actually use Binance proper BSC from the United States, no VPN. I mean, TLM is across 3 blockchains. I can't even buy from Binance.us. I don't think it's worth it. If I get BNB, and I know this is slightly off topic, but there's liquidity pools there onto the BSC from the US without ever touching an official Binance DEX. Is that a place? Is that the only place that GeoBlock is? And am I just using their DEX for all C? I'm not sure what that means. And then I can freaking play Crypto Blades, no VPN.
I'm not sure
Yeah,
about
because
the
you can
crypto
buy
part.
TL. Like just so to clarify, like if you're in the United States, you can't do the main Binance exchange, which has a lot more token pairs that you can buy. Whereas the Chinese exchange and other countries that they allow to use that, you can buy TLM, but on Binance US you cannot. So you would have to go through Binance Smart Chain, which is basically their distributed or their DeFi exchange, as opposed to their normal main exchange. So because unless you're using a VPN, you can't access the main Binance exchange as a
So if
US
you share
resident.
is my
so,
stream still sharing?
I can change
No.
it back. I just took it off when you were switching back to us.
so it sounds like
Okay,
you're trying to find a way to get
Your
into
screen's
buying
now on.
TLM, right? Sounds
Okay,
like you
so
want to
here
buy
I am.
TLM.
Here I am on Binance's decentralized exchange. I'm doing this from America, no VPN. Replugging. Yeah, that's fine. Whatever.
So are you theoretically trying to get swap into TLM through Binance Smart Chain, which
Or wait until
doesn't
you
have an
get signed
issue?
in.
Got a security.
Which
it's
doesn't have an
asking me
issue with your geolocation being in the United States, seeing as Binance has a lot of restrictions for U.S. residents.
Let me try this again. I need. So I'm using. It's like Truby, TRUBI. Is like the Binance. It's like an app that you can download, and then you can connect with just like your Ledger wallet or any BNB wallet directly to like the Binance. To the Binance. Like the BNB, like smart. What's it called? Like the exchange, basically. I'm forgetting, spacing out a little bit here, but let's see.
For a second while you log in, we'll say Richard also said a lot of people don't realize about the staking rewards of the Wax wallet. Yeah, when you stake your Wax, you need to be voting for stuff to get the rewards, and you get Wax rewards. Like you get 4.8% back per year. That's a lot if you're staking a decent amount. But you need to continue to vote for block producers or guilds or whatever they're called. On mine, I actually have it set up to like I have somebody auto voting for me, but I just gave all my votes to I think it's a guild. I don't know exactly how.
Yeah,
that
you
works.
can delegate a proxy to vote for you, and that's built into the Wax Cloud Wallet interface. That is pretty obvious on how to do that.
I do mine on wax.blocks.io, but I use Anchor, so
yeah. So this clarification is it doesn't have to be TLM. It's pretty much anything as long as there's a parent. I never have to touch the exchange the Binance runs. I hear Qcoin can help, but once my money is on Binance Smart Chain, the devs that use that, they won't block me if I got it on Binance Smart Chain. I guess I'm asking the block. Hold on. Is the block really only on the distributed exchange of the? I see. So is there an issue with being a U.S. resident using Binance Smart Chain as opposed to the Binance.US exchange? So I think Binance Smart Chain is DeFi, so there is no. I don't know if there's like an IP geoblock on that.
Yeah, there shouldn't be, but I'm also not able to log in.
Have you? I guess the question is for Starfighter. Have you tried? Like, does it give you? Have you tried it yet, or you just don't want to invest in the BNB unless you know for sure?
I don't ever use Binance.
I honestly haven't used Binance Smart Chain much. I know Max has, so I guess.
All right, yeah, you can see if you can see.
Do you want me to put your screen on?
Yeah, I'll put your screen on.
Sure, yeah. Let's see.
So this is Truby, which is an app that you download that interacts with Binance Smart Chain. Is that correct?
Yeah, this is like, I'm not sure if TLM might only trade on like this only trades the stuff that's like specifically trading on their smart chain. So like
because the coin pairs on Binance US are pretty shitty. There really aren't a lot of.
You can trade Matic here.
Pairs there.
There's a ton of stuff, but let's see if I can see TLM. TL
doesn't look like it.
No, not under BNB. Under alts maybe. It's definitely not a fiat or Bitcoin. It should be under BNB. I've used this to do like LTO network back in the day. Let's see if that one's. So this is just not showing up. Oh, there it is, LTO. Yeah, so, oh damn, it's also up a lot. Let's see. But this is like one that I'm just signed in with my wallet right now. And like you can choose like an asset pair. If I can use my BNB tokens, buy it directly. Use this also has like a wallet tab. Let's see, like balances here. I can use this to send out whatever I have. Got some Bitcoin in here.
I guess the answer is no. We can't get TLM on this, right?
Yeah, although I don't think they were specifically asking TLM. I think they were just seeing if there was an issue with using Binance Smart Chain without a VPN, if that's possible. But I do think the trading pair.
So this is Smart Chain. Binance Smart Chain assets, like directly. Like if I buy BNB tokens here, like I can send them to like any BNB wallet. I can like buy. This is how I bought. What were they called? AVA tokens. I got them from actually from the Neo network back in the day, and then they ported over here. But
yeah, like Switch.io is like a Neon.
Yeah, exactly.
Neo,
but this is definitely like the BNB
platform.
chain, and you can use this to trade directly on the blockchain without a VPN and without making an account. This is just using a wallet.
Yeah. Okay. So it doesn't give you TLM, but it does give you the option to have more coin pairs than Binance US does, and it doesn't have a VPN issue
here. You can see I'm scrolling through them right now.
Address. So I guess hopefully that answers your question, at least as far as the utility being better than Binance US without an issue with your IP being geolocated in the US.
So you can get Matic BNB side like chain Matic tokens on here too. So even if you don't have any BNB, you could send your BNB to your Matic to a BNB wallet. Actually, you would need a couple BNB to pay for transaction fees, just like with Ethereum. So, I mean, I
So-
wouldn't use this if you don't know anything about the BNB chain, but this is definitely a much cheaper like interface for trading if you're doing like lower volume trades.
I think they're
Like, you
also
could
worried
trade,
about like tax stuff, but honestly, I wouldn't come to us for tax advice. We're not like tax experts. We don't think there's
Yeah,
anything
that's
wrong with
true.
doing this in America, but also like,
It's still-
what do we know?
Yeah, the regulation's still really ambiguous, particularly in the U.S. So, without getting too specific to our part of the world and for a global audience, it is kind of a hard one to navigate, to be perfectly honest, when it comes to IRS and tax season. But technically, DeFi platforms do not ask for your personal information. They only connect to a wallet like a MetaMask and or like a MyEther wallet or whatever. So there isn't really a connection to your name or identity outside of an address, hexadecimal key or whatever. So
He's asking what
that's not
is-
financial advice, and what you declare as a taxable event and not is something I really don't want to get in the weeds on, because there's a lot of liability there.
Yeah.
They're asking what is the SC smart chain? Do you need BNB for gas is all? Because they saw so many videos about crypto blades from people in Louisiana, and they're wondering how.
I'm not even
But
familiar with what
we don't know what
crypto
crypto blades is either, so we
to
can't
be
really help you with
honest.
that. Sorry. If we knew what it was, maybe we could help, but we do not.
Yeah, this one
But
is mostly
BNB
for
is the
spot
gas
trading on
token.
BNB.
So BNB is the utility token for the smart chain. So as you know, Ethereum and gas, BNB and Binance are one and the same.
I think
Oh,
that's going to
yeah.
conclude our stream for the evening. Thanks for tuning in.
BNB.
If you have any questions,
another thing that I wanted to add to why I like to yield farm 8 Ether and Wax is, like, I had such a large stake in that pool, and I feel like it's fun to provide that for other people who want to like sell or trade their 8 Ether or their Wax around. Now those people can do that and not like have a shit rate, because it actually is liquidity in those pools. So like a part of why I supply liquidity on Alcor is the nerd factor of like, it's cool. It's cool to like provide liquidity to like a growing network of people, like mostly gamers and people playing like these games, trying to like cash out in super simple ways, and you don't have to understand anything about what's going on behind the scenes to participate. So I feel like that's definitely, it factors in for me, where it's like, oh yeah, I provide liquidity because there's a whole community of gamers who want to use liquidity out of these pools.
Yeah, I mean, if you're a whale in our planet and you want to like get into another game and you want to play like Metal War or whatever, you can be like, well, I'm gonna take all my success in our planet and swap it over into this next game. You can do that, and that's the cool part about Alcor, and that's the cool part about Wax as a collectible and a gaming network, particularly because you can take your success in one and roll it over to the other, and you can, and that's what the liquidity and the decentralized nature of multiple people across the world providing liquidity to give people the ability to move currency back and forth so easily.
For sure, yeah. I was also
Anyway,
saying,
we gotta shut up now. Lewis is trying to end it. We gotta stop.
If you have any questions
we gotta
or
stop,
comments, please just put them in the comments, and we'll do other
we'll
episodes. But we want to know
get
what
more
other people
specific
think.
with it. There's a
'Cause there's
lot to dive into for this stuff. I feel like we barely scratched the surface.
Yeah, but let's see what people want to hear before just shoving information down their throats. But yeah, thanks for
that's
watching. Just let us know what you want to hear about. We're going to do more tech talks. Last one was Anchor, or like not
Hardware
Anchor,
wallets.
Ledger and Anchor hardware wallet stuff, and also like web wallet. This time it was liquidity pools, but any sort of stuff like that, let us know what you're interested in hearing in. We participate in a lot of this stuff, even outside of the Wax blockchain. And thanks for watching. We will catch you tomorrow night at 6 p.m. We have marbles, and also the Nasty Hooks are doing a concert on our Twitch, so it should be fun music and giveaways. See you then. Have a good night.
See you on the flip flop.
See you guys.